Hey guys, it's Kevin. I am here to do my weekly trade review. This is going to be my trade review from May 23rd through May 26th. I traded Monday through Thursday, did not trade on the 27th since it was Memorial Day weekend coming up. Alright, so let's get to it. You guys know the drill. I pick out the time, go back, look at the chart, and just kind of critique myself on the trade. So first trade of the week was on Amazon. I bought 7 shares at 702 at just about 941. So let's go find that and see what was going on here. So this was a case where Amazon just kind of dropped lower to start the day. Amazon has been very strong all week, so I was trying to buy the dip versus 700. My stop loss was just underneath 700 at 699. So I like my setup when I see it because I like going long kind of versus around levels. I bought in around here and then got stopped out on that move down there, and then it just kind of went sideways all day. One thing I don't like about this though is I made the same exact trade versus the same exact level last week and it didn't work, and I tried it once again for kind of my first trade of the week. So would have preferred if I waited for a bounce off of 700 first, where maybe it started coming back up towards 03s or 04s, and then traded with a bit of a looser stop, because again, I like the idea except for the fact that the same exact trade did not work last week either. So here I am trying it again. So fine with the idea verse 700, but given that it didn't work in a prior trade in a similar situation, would have preferred to wait for some type of a signal, a bullish signal off of 700. When I look at it, got stopped out about 10 minutes later, so fine with that. Good stop. You know, if I'm going to get stopped out, I want to get stopped out underneath 700, so that's that. Next trade was on FCX at 945. I went long at 1082. Alright, so FCX opened up and immediately went higher. It opened around 1080 and then hit 1110, and I got filled at 945. I really like my fill when I look at this, because when you're coming down here, this is where I got filled. I got filled at 1082. When you're coming down here, I know that I can have a stop just underneath the current low, which had been about 1070, because my thought process with a setup like this is that if you go higher to start the day, which FCX did, and if you're going to go higher later on in the day, then there's no reason to make a new low after the first 15 minutes of the day. And this area right here was the low from the first 15 minutes of the day. So I like my entry because I think it's a low risk entry, high reward payout, meaning my risk is right down here, 13 cents or so, but my reward, if it comes back up to the high, is at 11.10. It's a 30-cent reward, so nice 2-to-1 risk to reward ratio. So I like the entry point. And what I also like is that I know, so I filled the order at 945, but I remember this trade, I had placed the order when the stock was hanging out around 11 bucks. I wanted to get in down here, so I like that I was patient in getting my fill where I wanted to get it. So I like the entry point and the patience that was used to get that entry point. I end up selling the position at $11.06 at 10:01. So 24-cent profit. Is that right? Yeah, 10:01. So I sell into just underneath the high. So I like that. I had a 20-cent target and I got 4 extra cents. Could have gotten a little bit more, but all in all, good stuff. Good trade. Good job holding for a target. Even got a little bit more. So again, solid trade there on FCX. Next trade was back in FCX at 10.96. I bought at 10.13. So again, I really like the entry because it just looks like, hey, I bought the first dip back here and it worked out well, got a nice move higher, and now I'm buying dip number 2 right here. I got filled at 10.96, which is just about the low on this dip, and stop loss was going to be underneath 10.85. I didn't see any reason for FCX to come back down to this area if it was going to be trending on the day, so I like that in terms of what I was looking for with the entry point. And what I really like about this trade is that it's going back to a trade that had just worked well 15 minutes ago. Dipping back in a winning trade where the trend still looked constructive. So I call that a revisit trade, where you revisit something that worked out previously. Now I exit the position at $11.07 at 10:42, about 30 minutes later. And that was below my target. I was looking for 11.16. So Kevin must have gotten bored here. Let's zoom out a little bit and see what was going on. So I exit at 10:42, which means that I saw this right here come back down and I just lost patience. So I exited at $11.06 because looks like I just got tired of holding. However, it did end up hitting my target about 25 minutes later. So just poor patience on that, because look, I understand why I'm exiting, but patience is a problem of mine and it's something I'm trying to get better at. I did a good job being patient the week of May 20th. Poor job being patient right here on this trade, because again, it did end up going to my target. It never came back below 11 bucks. I can understand if it would have came back below 11 bucks, I wouldn't have liked that, but it came down to 11, bounced right off of it. So, you know, it is a winning trade, but I don't like the exit because of what appears to be a lack of patience to me. And one thing that annoys me on this is, look, I held for 30 minutes. That's, in a prior life, that's a very long time for me. At this point, what I'm trying to tell myself, though, is, hey, if you held for 30 minutes, what's 5 more minutes? And then at that point, if you've held for 35 minutes, what's 5 more minutes? And just try and keep talking myself into continuing to hold as long as the trade is still intact. Trade was still intact. No reason to exit based on price action. And what I'm going to say, no reason to exit below target based on price action, because sometimes you have a target and then all of a sudden it doesn't look like it's going to go to your target anymore, so you make that type of exit, and I'm fine with those types of exits, but this one, that wasn't the case. Good entry, lost patience, poor exit. And after those trades, I got in a stretch of some really bad trading this week. So let's review that. And I know what happened, at least I think I know what happened. Next trade, it was the next day, so those were my only trades for the day. So then I first trade of the day on Tuesday was shorting Netflix at 9:32. So it looks like an aggressive trade right away. These types of trades piss me off. Not the first one necessarily. So Netflix was gapping up this day. I know you can't really tell by this 3-minute chart, but Netflix was gapping up on Tuesday after a bullish Monday. I just don't like that I'm shorting a strong gap higher. Now, when I look at the chart, I did get short at 9:32 at $96.42, and after the first couple minutes, this actually looks like it could be a good short trade. As you can see, a nice topping wick where then it comes right back down to 96, and then I got stopped out then right away on this next candle. I'm not too upset with this trade because, again, based on this very first candle, when I look at it on the chart, that looks like, hey, that could have ended up being a pretty nice move back down. So it is what it is. Obviously, it didn't work. One couple notes that I'm going to make here. Tried to short strength into a pre-market gap on follow through from Monday, and that's not really a good setup. So not a great setup. With that said, trade showed potential upon entering, and just happened to get stopped out. No problem. You get stopped out. Hey, you want to be aggressive, get stopped out. It is what it is. Here's what pisses me off. Trade number 5. Very next trade. 8 minutes later, what am I doing? I'm shorting Netflix again. And it's just like, come on, dude. We look at this chart. There's no signal here. And I remember after entering just feeling like I was forcing the trade. And sure enough, as this trend shows you, certainly didn't end up being a good trade. Got short once again right around here, and then got stopped out within 10 minutes right up here. So just awful discipline. One of the things I try and tell myself is do not revisit a losing trade until it is clearly to your advantage. In this case, there was nothing that showed it was clearly to my advantage, just forcing the issue. Now, one silver lining, one little positive that I do like from a big picture perspective is I lowered my size from 50 shares down to 30 shares, and I used a wider stop on the second one. Because I was going to trade smaller, I was going to allow for a looser stop. And that's something that I've tried to keep in mind when stocks are especially volatile. So I like that thought process in terms of technique. You know, if you think the stock's going to be very volatile, trade smaller, trade wider. I like that. What I hate, though, is what I first pointed out. Just absolutely no signal at all. Just completely fighting the trend and just an asshole entry. And again, I hate revisiting. Revisited a short trade that didn't work 8 minutes earlier. And again, no signal at all, so why the hell was it going to work the next time? Poor thought process, quite simply. One positive, traded smaller with a wider stop, which is a good idea in volatility. Sorry. Next trade of the day was on Facebook at 10:10. I went long Facebook at 10:10 at 116.50. So I went long right here. And I like this trade because number one, technology stocks were going higher. Netflix in particular had started out very, very strong at the beginning of the week. The NASDAQ was starting out pretty strong. Apple was strong. So I thought tech stocks could get a bid. And I remember kind of looking around and being like, okay, well, which tech stock hasn't taken off yet? And Facebook was one of them. And what I liked is that it had started higher, made new highs on the day, and pulled back to this 116.50 area. And if you've watched my videos in the past, you know that I really like trading around 50-cent levels or double zero levels such as 116, 117, in this case 116.50. So had a little sideways consolidation here on Facebook. Good setup in terms of the level I can trade against. Wasn't a great setup in terms of, it hadn't really moved that much. It was still within the range from the first 15 minutes of the day. So I was betting that it was going to end up starting to move. So I like the confidence. And most importantly, again, I have a level to trade against. That's what's most important. Do you have something you can trade against? Have you seen some types of signals? As I mentioned, the signal wasn't necessarily from Facebook. It was from technology stocks in general. So I like it. I like the level I'm trading against. Seems like low risk, high reward, because if Facebook does take off, it's going to pay out nicely. So entered at 116.50, exited at 116.88. My target was 116.90. I sold 2 cents shy of my target 18 minutes later at 10.28. One thing I don't like about this is I actually raised my target. I know you can't see it in this list, but I raised my sell order from 116.90 into the 117s, and then I ended up lowering it back down. And similar to that FCX trade that I reviewed earlier, so I sell at 10.28. I sell basically into this area here as it's testing the high. And again, just a loss of patience where I was wanting it to really make those new highs right then and there, but the market doesn't trade based on what I want. It trades based on what it wants. And if I just would have been patient, Facebook did end up going into the 117s, hit 117.20, and even later in the day ends up trading up to 117.60, 117.70. So just poor patience in that regard. I tried to get confident, which I like. Good confidence in raising the target into the 117s. That was an adjustment that I did make, but poor conviction or poor confidence in the confidence, if you will, because ultimately I didn't end up leaving my sell order up there, and I should have, because I would have gotten filled. So need to get more confident in that and have more patience. Because I did sell 116.80s. By the way, my fiance ordered deep dish pizza tonight, and I can smell that it just got here, so getting through these last 10 reviews is going to be hard because it smells amazing. If you're from Chicago, you know what I'm talking about with our deep dish. We don't mess around out here. Anyways, back to Facebook. So good confidence in raising it, but did not have the conviction enough to keep it up there. So, poor patience. Could have done better, and need to reward myself when I have these instincts. And most importantly too, is there was reason to be raising my sell order. If we look back at Facebook, it had gotten above our high a day. It made a new high. That's just a positive thing. Anytime you see a stock make a new high during the 10 o'clock hour after the first 30 minutes of the day, that's a good sign. So this right here is a continuation signal. I just did not have the patience to wait for this action up here. My exact sell order was 117.12. I would have gotten filled about 20 minutes later. So talk about it a lot, where If there isn't a signal, then okay, yeah, maybe you do lose patience. But in this case, there was a signal to keep holding. All right, trade number 7. Next day, I started buying Facebook calls at 9:33, so I made some aggressive trades on Facebook pretty much as soon as the day started. So let's go here. So Facebook was gapping up. And this is another trade where it just pissed me off, just forcing the issue too much. Sorry, I missed it on the chart. Let me get to it here. So you had the gap up, and I just chased and got excited. Gapped up over 118. My setup was versus 118, but I did not go long versus 118. I went long in the 118.20s or so, and I was buying options, and then I ended up getting stopped out into this shakeout right here, and then the stock fully recovers. Now, one thing I'll point out, where did this shakeout occur? It took the stock right down to 117.50, which beautiful setup down here, but instead of buying down here at 117.50, I was getting stopped out because my stops are preset. Could have adjusted it, but I don't really like getting in the habit of adjusting my stops. But this is the consequence when you get a bad entry. You get stopped out at what then turns out to be a good entry. So just a piss poor trade right here. I would say this was probably my worst trade of the week. I did buy 2 contracts, one at 160, one at 155. 30-cent stops on each of those due to some slippage. The actual fills were a little bit lower, but just poor trade. Nothing really else to say. Bad entry, no real setup, just excited and kind of hunch trading. I had a hunch Facebook was going to continue higher, which it did end up doing later in the day. The problem is, though, I decided to trade 2 contracts. Usually I just trade 1. Look, if I want to trade a hunch, then I should just stick to 1 contract. So stick to 1 contract on these types of trades. That's the way to do it. And nothing worse than getting stopped out at a good entry point, but that's what you get for making a terrible entry in the first place. No signal, no nothing. No signal, no nothing. I have something I try and tell myself, which I didn't follow in this case. If you see something, trade something. If you don't see something, don't trade something. Sounds simple, but as this trade can attest to, harder to be disciplined to follow it at times. And trade 8 was just the same trade, so just copy and paste the same thing. Trade number 9 was back to Netflix. This is another one that just pisses me off. Wednesday was not a good day. Why do I get so pissed off with this trade on Netflix number 9? Well, I shorted it 2 times the day before. You guys saw that didn't work. And now here I am the next day, and I am trying to short it again. So that didn't work either, as we'll see. So the time I short Netflix at 9:49 at 98.95. Well, at least on the next day I waited a few minutes, waited 15 minutes, so maybe I did have some type of signal. Okay, so this one I'm not going to kick myself as much over because I was watching it, and every time Netflix was coming up towards 99.50, it was getting sold back down. So I do understand why I was trying a short trade here. And then I saw it make a new low at 9.45. So then when you bounce back above 99, and then you weren't able to consistently stay above 99, our 99 levels right here, I did short it, and so I short it into this move right here. So not horrible, not a horrible entry, because I consider these wicks up here where you're coming off of 99.50. I consider those to be potential sell signals, because hey, it's not able to stay up there. Maybe it's getting ready to sell off. I end up covering the trade about 8 minutes later at 99.15, just for a small loss, more or less break even. My reason for covering is that it just wasn't moving in any direction. You look at this sequence from 9:45 to 10:15, it was just pretty completely sideways around 99. It did end up drifting a little bit lower towards 98s. Could have gotten my cover had I been patient, and then it ultimately kind of recovers and rallies later in the day. Not sure how to judge that trade. Just seems like maybe a trade out of boredom, or trying to get it back after it took some money from me the day before. At least there was a signal, though. That's the first thing I'll say. At least there was some type of short signal, but still not in love with this trade. Seems kind of forced or out of boredom. In fact, it would have worked out if I was patient. Are you noticing a theme here this last week? Would have worked out if I was patient, but again, to what end? Are there better trades out there is something that comes to mind when I look at this. Just kind of a stay away. Next trade was back to Facebook, so I tried going long Facebook again once it had regained 118 at 10.10. So here's my problem. I'm going long once again in the 118.30s, 118.20 range. When I'm buying options, it's just so important to me to get in at a level that makes sense, and this just doesn't really look like a level that makes sense. I'm not close enough to 118. I'm not breaking out above 118.50. I'm just kind of going sideways, and so I chase back in on calls, and then I end up getting stopped out at an hour later at 11:12. I get stopped out an hour later at 11:12. What was going on at 11:12? It was just still going sideways, but because it was sideways and it was Wednesday, there was some major theta decay and vega decay on Facebook. Oh, that's not the day I want to look at. This is the day I want to look at. So I go long a second time right around here. That just looks like a major chase trade. You go from 117.50 up to 118.30s, and I'm going long after an 80-cent rip. Just stupid shit. Then I get stopped out at 11:10, right around here, once it kind of starts to lose the consolidation that it had been in and drifts lower. Got stopped out at the right place because it did go lower, and if I would have held, these options did deteriorate much more in price throughout the day. But it's just another one of those trades where it looks like it's kind of overzealous, acting without a signal. No signal. Just looks like a chase trade, as is often the case. Chase trades are usually not good entries, and paid the consequence by having to get stopped out again. And just really poor discipline seems to be what I noticed from that trade. I did do one average down at 1031 at 92 cents. Not in love with averaging down. Now my entry at 1031, as it happens, it's at least a much more sensible entry in my opinion, because Facebook, it's basically right here. I do one average down, and at that point we're much closer to that 118 level. So from that perspective it makes sense. However, if you look at my trades on the day, how did my day start? Well, my day started with awful trades on Facebook, a forced trade on Netflix, another awful entry on Facebook. I don't deserve the ability to average down when I'm trading like shit. I think averaging down is something you should only do, or let me put it in terms of me. I think averaging down is something I should only allow myself to do when I've been trading in a rhythm that day and been making good trades. If I've been trading like an asshole all day, then averaging down is probably just going to be another asshole trade. Now, did just break even on that trade, so it didn't do me any harm, but again, I don't want to get in the habit of averaging down while I'm in the midst of a bad day, because that's how a bad day turns into an awful day. So don't like the average down based on how poorly I had been trading on the day to that point. Good job though exiting break even when it was clear the trade wasn't going to work. Next trade, jeez, that was awful. Next trade's next day. It's on FCX on May 26th. So FCX the day before on the 25th closed strong, closed near the highs. Then on May 26th was gapping higher. But very similar to the day before, I just make an over-aggressive, overzealous trade where it looks like I'm excited. So I go long FCX at 1196 at 932. So I'm going long into the gap, basically not even waiting for anything. And then I end up getting stopped out pretty much right away. So just, again, poor entry, poor discipline, no signal, but I'm finding a way to get a trade anyway, and obviously it didn't work. And really not sure what I'm thinking other than being overexcited. And also, seems like I'm trading for the wrong reasons, meaning no signal, but rather maybe this breaks above 12 and I catch a big move. Seems to be what it looks like I was thinking there. And I just call that a hope trade. Not a discipline trade, just a hope trade. Next trade was again on FCX. I did this so many times this week for whatever reason, where I just immediately revisited a losing trade without any proper signal. So I go long again at 941, about 9 minutes after getting stopped out the first time. I go long at 941 at 1181. And, you know, again, I'm just not really sure what I'm seeing here when I look at it. Here's my entry. I guess maybe I'm trying to say I'm going to go long versus 1175. But look, you've gotten sold off of 1190s 2 times. 1191 was the high for the previous week going into this week, so I knew that 1191 was a key resistance level, and I'm buying it just underneath that key resistance level before it is showing positive signals of being able to get above it. And it's no surprise that just a few minutes later I end up getting stopped out as the stock moves to new lows. So just like the Netflix trade from earlier in the week, just an awful trade. I hate this. It really pisses me off that that's what I'm seeing. Awful entry. If anything, why wasn't I thinking short? You know, the signals to this point had been short signals, or at least no signals. just hate when I revisit a trade that I just took a loss on without yet having a clearly positive signal to justify the entry or the re-entry. Because now I'm losing money twice. And losing money twice is twice as annoying as losing money once. So awful trade right there. Next trade was on Facebook again at 10:26. I bought calls at 10:26 on Facebook. Let's see what was going on. So Facebook started out the day sideways and broke out above this high at about 10 o'clock. And once that breakout higher happened, I remember I wanted to get in Facebook on a pullback down to like 118.50. As you can see though, it was not pulling back, and instead what it was doing is it was just kind of going sideways around 119 and holding the gain very, very well. I went long right around here. It is kind of a chase trade, but unlike the last chase trade that didn't work on Facebook, this one does work, and there's a couple different characteristics of this one. Number one, it's been 56 minutes into the day, as opposed to the other one was only 3 minutes into the day. So if I'm going to chase, I like that I'm chasing after I've already seen a lot of price action. I've seen how the level 2's been trading. The other thing I like is that this entry was for 2 contracts right away. This entry here is only for 1 contract. So I have more of a hunch, and if I'm going to have more of a hunch, more of a gut feeling trade, I want to keep the size small at this time. So I like that I just get in with 1 contract. I end up selling that contract at 11.34, but there's some other entries that I want to go over first with this, because I added to this position as I watched more. So this is all just one trade, basically 14 through 16. So I do one add at 10.55 and one add at 11.14 after I had already been in. So I want to go look at 10.55 and 11.14 and see what was up here. So Facebook had moved to new highs on the day, and I was already playing from ahead with some unrealized gains in this position. So I do one add here, and then I do one add right here. I like both the ads, to be honest with you, because dips in Facebook had been getting bought all day, and this was the best dip of the day when you went from kind of 119.70 down to 119.30. That was the biggest dip of the day, and I felt like, hey, psychologically, a stock that's been super strong finally gives a meaningful dip. This is where people are going to look to take advantage of that dip and go long. And then the second entry, so this is the second entry, because again my first entry was back here. And then now the third entry I like as well, because at this point now I have a clear sideways channel to be trading against, where I can say, okay, well, if it stays in this sideways channel, I'm going to bet that it is going to get back up towards the high, and if it doesn't stay above the sideways channel, then I can just stop out, right here where I made that second and third entry. That was my thought process. So I like the entries there, and I like the patience there, because at that point I'd been in for 30 minutes. So then my first sale was at 105 for a 50% gain on the 70 set entry, and my second sale was at 104, both of them coming around 11.35, 11.38 for a 24% gain. So good gains there. And let's look at what was happening at 11.35-ish. The stock was making new highs, so I was taking profits into the new highs. I like the execution. This was on a week where I didn't make many good trades at all. These were that was one of my better trades for sure. So I like that because I chased, I started out with only one contract and then let a lot of time go by before adding. You know, that to me that shows sensibility and observation as opposed to just a lot of the other trades I made last week where it's just, oh, maybe this happens, maybe that happens, let me get in right now and see what happens. This one, it's like, no, there's actually some rhyme and reason to it, so that's good. And really good patience. You know, I got in, my very first entry was at 10:26, and I had sells at 11:30, and then my last sell was at 12 o'clock. So I was in there for over an hour, which is good. What a surprise that my best trade of the week was also the trade I was the most patient on. Funny how that works. And I also like that, you know, I'm selling in new highs. My target was 120, so I wanted to take some profits into the 120 target. And then on 15, you know, I like the averaging up into the first pullback, or first, what I'd say, good pullback off of the high. That shows confidence. And I like the patience and selling as the target approaches. Now this third contract I just sold at break even. So the third contract that I was holding as a part of this trade, I was looking for 120s. So I said to myself that I'm just going to hold it as long as I'm above break even, since I had gotten two good winners out of it. And this third one, I felt like it had the potential to be kind of like a 100% gainer, because I thought, hey, if Facebook does go into the 120s like I think it can, then, you know, that option is really going to get to move. Obviously it didn't happen. I ended up selling break even at 12 o'clock, but you know, that's just the way it goes sometimes. What you think is going to happen doesn't end up happening. So I sell right here because my option comes back to break even. It also starts to make new 30-minute lows, which is something it hadn't been doing all day. So good exit on that. Easy to say, oh, well, I should have just sold that one at $1.05 too, but then if it does end up going in the 120s, then I'm saying, oh man, I wish I would have held. So I like the approach with this final contract. Keep one for your target. Target didn't end up coming, so I sold it at break even. Completely fine with this. Last trade of the week for me was on Facebook, trying to go long shares at 12:37. Got stopped out 9 minutes later with a small loss. Let's see what was happening. So I like this because you had still been holding 119.20s and you were in a little sideways pattern, and I wanted to trade against the low from the beginning of the 12 o'clock hour, which was just above 119.20. Felt like as long as she stayed above 119.20, there was a chance that she could come back up and get back towards 120. What I like about this also is that instead of trading options, instead of going back in with options, I go back in with shares. And I like that because there's shares I'm not gonna have to worry about Vega or Theta, which are two things that when a stock goes sideways on you, you really need to worry about when you're trading options. As it is, do end up getting stopped out. So my entry was right here, and I get stopped out right here on the break beneath the consolidation channel, which to me was just going to then signal that it was going to be sideways for the rest of the day. As it turns out, Facebook was sideways for the rest of the day. So that was a trade where I felt like good low risk entry, just didn't work. I like that I traded shares instead of options to protect gains from the option trades. So again, good stop area. Just didn't go to 120 like I thought it could. Alright, so takeaways from this week. Well, first takeaway for me is just really kind of force the issue on a couple entries. Without any signals whatsoever. And making matters worse is there are 3 trades where I lose once and then lose again within 10 minutes. Or within, I don't know if they were all within 10 minutes, but so the first one was this Netflix trade. First trade of the week, or first scenario where that happened, this group of Netflix trades right here, those 2 Netflix trades, that's one. Number 2 is these Facebook trades don't work. The first Facebook trade of the day doesn't work, and then the second Facebook trade of the day doesn't work. And then number 3, FCX trade doesn't work, and then I try the FCX trade again, and it doesn't work. So look, I wasn't happy with the first losses from each of these trades, but if I just don't revisit, I could have at least saved myself some money. So I have 3 more losses than I should have from those types of scenarios. So and that really pisses me off. I can't be doing that stuff. That's just stupid. Those are distraction trades, forced trades, and can't be making mistakes like that, because it's just shooting myself in the foot. And giving away money. Also, a couple times on FCX and Facebook winners where I did not stick with initial or raise targets. So that tells me 2 things. Need more confidence, need to be more patient. Best trade of the week was the one I was most patient on and most confident in. I don't think that's a coincidence. And then also lastly, I don't like to talk about trades I could have made because I didn't make them, so you know, everything goes well in your head when you just make up trades. But shorted Netflix twice, went long FCX a couple times where it didn't work. Netflix finished way higher than any of my short trades on the week. FCX finished way lower than any of my long trades on the week. Why could I not identify the other side of my trade? So after short doesn't work on Netflix, think long. After long doesn't work on FCX, think short, or you know, at least consider it. I'm going to change that from think to consider. Adjusting those 2 would have made me some good trades this week. The good news, even though you traded like shit, didn't really lose that much money because I respected all stops, and that's always a good thing. As far as my grade goes, I'll give myself a D+, simply for the fact that I respected stops. That's what kept this week from being a bad week or an awful week. But yeah, a lot of work to do going into this week. Just need to clean some things up, mainly with patience, and you know, not diving back into the same trade after it doesn't work. So hopefully this week will be better and I'll have a higher grade to report at this time next week. Good luck, guys.